Hey everybody, this is Bob with Trade Genius. I got my good friend Phil here with me for another edition of the Trade Genius podcast. So Phil, are we going to hyperinflate, or are we going to crash, or are we going to hyper crash? Stay tuned. We think we have the answer for you, and a win-win regardless.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes, and if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co, check out our specials we have over there. We're running our February specials. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live, and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that.
Okay, Phil, my head hurts. My head's spinning. We're going from banks are okay to now another bank ready to crash. Another 150 banks are going to crash. We're going to hyperinflate. They're going to pivot. They're going to pause. They're not going to pivot. They're not going to pause. But I think there's a plan here. We may not like it. And I want you to see if you can go through it with everybody. And I'll chime in as necessary.
The short answer is all of the above from what you just said. But I think you and I, looking at the different data that we're going to show with the folks here, that I think we do have a plan. And I think that the Fed, at times, they may not look like they know what they're doing or flying by the seat of the pants, but we think they might have a plan here. So we're going to go over what we think that is. So first and foremost, people are thinking, well, they got to pivot, they got to pause, the banks are in trouble, they're not going to hike this time. Our argument to that is going to be they're absolutely going to keep hiking, and here's why. First and foremost, they want to get the inflation. Powell's mission right now is getting the inflation under the unemployment rate right now. So I think he will accomplish that because he's going to force us into a recession, and we're going to work through this. So this is what he's trying to do. Now you're going to say, well, he's killing the banks. No, he's killing the weaker banks and the banks that didn't hedge for what he's doing. And he probably, or the Federal Reserve probably knew there was going to be some collateral fallout, because this is basically the equivalent of finally taking the medicine that we should have been doing for the last 10 years. To his credit, he's following through. However, the plan for that is to utilize what's known as the G-SIBs. So what is a G-SIB? A G-SIB, and there's 8 of them in the US, it's a globally strategically important bank. I know it's a mouthful, just call them G-SIBs. There's 8 of them. Bank of America, Bank of New York Mellon Corporation, Citigroup, the Goldman Sachs Group, JP Morgan Chase, Morgan Stanley, State Street, Wells Fargo, and Company. So if you're looking to go and move if you're worried about the weaker banks and you want a bank that you can go to and it's not going anywhere, it's these guys. This is the Fed banking cartel, all right? These are the banks that are too big to fail. You'll never lose your deposit in them. The money's always going to be there for these guys, even if they were to fail. They're not going anywhere. They're too important. So these guys are going to play cleanup behind the Fed, all right? So whatever he's breaking, and he is breaking things, but these guys are cleaning up. So it's not going to be a systemic event. I know everyone's worried that it is going to be a systemic event, but honestly, they've planned for this. They've known for a while some of these banks were in trouble and weren't hedged properly, but it's all part of the plan, and it strengthens the G-SIBs. Okay, so then it comes down to, where does this lead us? So this brings us to this chart here about a recession. So they're manufacturing a recession as shown by this chart Bob dug up for us. And basically, when we get these readings, and I'll let Bob describe what it is, but basically we'll get 100 weeks, which takes us out to February of 2025. And the rules are different here. So Bob, what are we looking at with this?
Yeah, this is just a comparison of two different, a moving average and the yield of the 50-day moving average of the 3-month Treasury rates against the 10-year. And so basically it's an oscillation. It shows stress in the system, and as the stress releases, relieving of this stress doesn't mean relief for you. It means credit is tightening and the yield curve is starting to flatten out again. And that's why recessions happen. So credit tightens in this environment, and it's a big problem. And so I call it the acknowledgement chart. Basically, reality is set back infill. That's all that chart really means. And it's just another oscillation to show you. Every time it's happened, you go into recession, no matter how much people think it's not going to happen. And if I could make another point of your earlier comments, is that coming out of this, the regional banks and the local banks that survive, for you to get a loan at those banks in the future, your credit better be pristine. Or your collateral better be locked and loaded. And so these guys are primarily the people that lend into the auto loan market, the construction market, the what I would call the local commercial real estate markets. Those things are all dead. And so this will dovetail into that, basically saying that we're in recession for a longer time. And good luck getting a GSIB to loan you money at the same kind of what I would call looseness in terms of approval. These guys are really hard to get loans from. So this is a foregone conclusion, Phil. I think your 100-week thing is going to be spot on. And I think people are going to be absolutely dumbfounded and shocked that they're not going to be able to take advantage of these lower rates that are going to be coming in the future because they're just simply not going to qualify for the loans.
Yeah, and in each one of these readings, there have been no false readings. They've hit 100% of the time. So, and this, again, this is no surprise to the Fed. They're planning for this. So then that brings us to the pivot, right? Everyone's bidding up the market in hopes of a pause or a pivot. But in reality, that's not actually very good for the market. This slide here tells us that from when they pivot, which pivot's just another word for a cut. So we go to a pause. When you know the pause, when they pause, then you know the next cut is coming probably on the next meeting, or they might even do an emergency cut if the market really starts to fall off. But you can see here through the years from the Fed, first Fed cut to the bottom of the market, so the bottom of the bear market, it can be anywhere from 3 months up to 21 months. But because of the way that the yield curve inverted here, which is exemplified by this last chart, we kind of know that it's very similar to what we went through in '01 and '07, '08, '09. And so that's why we feel like we're probably going to see another repeat of that, especially if unemployment, because the labor market's tight, right? There's a lack of workers. That might take longer than usual to get down, so they'll stay persistent on that. And then that takes us to the actual recession. Here's another thing that does a pretty good job of signaling risk in the market, and that is our USA sovereign credit risk. They'll sell credit default swaps, which are basically insurance policies that an entity, whether it be a government or an insurance company or a company, a corporation in general, this is the rating, and this is when this goes up, those credit default swaps get expensive, but they're insurance policies in case there is a default. So right now, what do we have coming up? We have the debt ceiling argument coming up. Right now, we're seeing some early posturing. Doesn't look great, because it looks like both sides are going to be starting to dig in. So if we're unable to come to terms on that by the time there's a date, I don't know what it is exactly. I think we'll get more clarity on that as we get toward June, where we have to start paying interest payments. And if Yellen doesn't have any money in her checking account, that's not happening. And we know, we've shown you guys that balance is going down quite a bit. That's also in the newsletter. We track that as well. So this is going very high. So if you look at the dates in here of where we had our spikes, '08, '11, and now currently going into 2023, what does really well in those environments? Flights to safe havens. That is usually gold. And now with Bitcoin now being more institutionally traded, Bitcoin as well. So Bob, that's where I want to pivot over to you, because you worked up both charts on how we can use these as escape hatches through this whole mastermind diabolical plan that these guys are playing out with.
Yeah. So one of the interesting things that you're talking about too, that last chart, Phil, you don't have to go back to it, is that those are what's called Wall Street temper tantrums. Okay. And there's simply no way we're going to really default. If we default, it's over, end game. Fed's gone, Congress is gone, blah, 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 blah. This is their temper tantrum telling the politicos that you need to more power, Scotty, to the fiat engine. And so they're kicking and screaming. And the other thing I want to really say on the debt ceiling argument that's coming up, it won't be a cliff, Phil. It'll be a interest rate gets paid first. There's like a series of things that get paid in priority. Mm-hmm. And it's going to be painful. Mm-hmm. And if push comes to shove, the Congress will agree on what we'd call short-term extensions just to pay interest, but they can shut the rest of the government down. So it's absolutely going to be painful. And we know eventually they're going to approve it, and then eventually it's going to become a nightmare, because I think we're going to get an increase in fiat. We're not getting an increase in lending. And so the fiscal authorities are going to create the issue that we're going to show here in the chart here too. Is this first one Bitcoin, Phil?
This first one will be gold.
Gold. So what happened here with the gold chart, and again, this is our system that we use. So you see that gray bar on the bottom, that is the range, or we call the range trader. It tells us whether we should be in buy the dip mode or sell the rip mode, or is this a good place for a successful test of support? The other thing that you see on that chart there is a channel that we have. It's a custom length in terms of how far back we look and how wide the channel is. Very effective tool that we have as well. And then on the bottom where you see these vertical lines, that's our heat indicator. And Phil, just for my own personal, I threw on a short-term Stoke RSI just to kind of, test for confirmation. And so what we're looking for here is we're looking for a successful test at a Ranger. We got it. Came up and it tested that black line, which is the moving VWAP, which is a kind of a bull bear line for institutions. It failed there, came back, and it double tapped support and came back up. And then we got confirmation from our heat indicator, and we crossed over the 50 line, which basically says you better get long. So everything hit at the same time. It was a beautiful setup, and gold is now running up. It did a double top, but it broke through. It held back. So now we watch for confirmation. And that blue line at the very top, Phil, that's over 2,000, is the next resistance area where we actually have a prior high. And so our view is that if it gets to there, it's going to probably get to that blue line in the top of the channel at the same time. So I'm looking for that as kind of short-term resistance, Phil.
Got it.
And Martina Booth said something which I totally agree with. She goes, hey, you got to argue with Peter Schiff about gold. She goes, I'm not arguing with Peter Schiff about gold. When credit tightens, gold loves it. And when credit crashes, gold goes parabolic. And I think we're in that now where people are saying, maybe I need to shift into gold. But now we have a new kid on the block, a good-looking guy named Bitcoin. And Bitcoin is kind of like the movie Cars, where you got Speed McQueen here. This one kind of sniffs out the problems and the solutions faster, kind of the canary in the coal mine. And what this one did, Phil, which was really, really fascinating, is because we weren't quite sure, we're going back and forth. Are they going to dry liquidity up and drive this thing down back into the 17, 18,000 area? Right. Or is it going to is the crisis of credit going to overwhelm anybody's worry about liquidity and for it to pop? And right. We got our answer, and we've been waiting, and we got a flip of the Ranger. At the same time, we got heat going over the 50 line, which put us in a situation where, if you aren't long now, this is a very low risk weight plates to enter, and it turned into a 30% move, Phil, in a little over a week. Now, I'll turn it back to you if you have any further comments on either of those charts.
Well, I think it goes back to yesterday's video where I think we're getting our answer as far as the bond market move, which basically I'm going to say ended the yield curve inversion, started our 100-week process. We know how gold behaves. We could see that building on the chart. Like you mentioned, the question was out on whether or not the liquidity, which affects risk-on assets, so stocks and crypto, we weren't sure if Bitcoin, and I'm going to say Bitcoin, not crypto, because Bitcoin can keep going up and alts and stuff won't follow this, because if it's going to be turning into gold 2.0, and you've kind of been seeing that with the alt BTC charts, all the alt BTC charts have been going down. Alts have been going up with like a sympathy lift with Bitcoin, but not like the broad crypto move, because this is more complicated than just, risk on. This is the bond market shifting. We're going into if we go into a full-on bond bull market, you have to be in gold or Bitcoin as gold 2.0. That's what the market's telling us right now. And this all transpired within the last week. On top of that, you have the large, like you said, large daily candles. This is our second weekly, assuming this weekly candle holds, this will be our second 20% weekly candle. And whenever Bitcoin shows you the hand like that, expect follow through. Those are big moves, and actually bigger money waits for that. They're not waiting to see is this going to be a 2019? They want to see confirmation, and then they'll come in after. And that's why some of these moves will be sustained for so long, because you think, it's got to pull back. But historically, when you look at strong retrace moves, especially on Bitcoin, because it's more finite on the supply side, you'll see that these things will go 2, 3, 4 weeks without much of a pullback in it. It leaves everyone behind. And that's the hard thing about Bitcoin, and why we always say you should be always long Bitcoin in some capacity, because it's very hard to jump into these moves unless you know what you're doing and differentiate between a pump and a dump, or a pump stall pullback, or it just keeps running like a freight train, which I'm going to argue is this type of move that we're seeing now. And we probably won't see much in the way of pullbacks. I know we have the FOMC on Wednesday, and that does introduce a lot of volatility, but we could just run right up into that. And that 30 to 32,000 area above us is looking pretty good right now for a target.
Yeah, and that blue line is the last resistance. I
Yep.
think it's 31,009 something. So I'm glad you brought that up. Yeah, and just so you guys know, I didn't want to just kill you guys with charts today, but we re-entered Mara again as official trade at Trade Genius, and it bumped right up to its 144. So if it could cross over that 144, which is around 840 area, because it kind of pulled back towards the end of the day, then it's going to probably make another 10 to 15% run. And I think maybe next week we'll do a video on just telling us to fill real time, showing maybe the relationship between like these crypto miners to Bitcoin itself, just so you can get a sense for kind of who's leading the show, because it runs a little bit like gold and gold miners. Sometimes gold leads the show and sometimes the miners lead the show. And so it'd kind of be good to see some ratio charts there, because gold and gold miners are having the same issue. I also didn't have charts for there too. I think there's still, a little bit, I call it disbelief. The underlyings are moving and the producers of these underlying are kind of like saying, let's just see, just like Phil said with these institutions, all the miners are still holding back a little bit just so they don't get stomped on. And because what these guys do, Phil, as you know, is they sell forward in the markets. So they want to make sure that price is going to be good before they stop selling into the future. And when they do that, that's when you get a really big push in price higher, because they're not contributing to the selling. Did that make sense?
Yep.
Yeah. So that's what we're watching. So when you start seeing that oscillation move where the crypto miners and the gold and silver miners start to have a faster relative strength than the underlying, then there's belief, and you'll start seeing a bigger move in both. And I suspect we will. I think people are sufficiently scared now. The politicians are all now wide awake. The Democrats must be crapping in their pants right now, because they're going to walk right into a financial crisis right when they're telling everybody how great everything is. And Powell's saying, hey, my reputation's online, and I'm not going to simply just walk in, give away the store, and be the guy that created the Weimar Republic in the United States. So there's some really interesting cross currents here. But either way, if Phil and I, everything we said today is wrong, gold and Bitcoin are going to be beneficiaries of this uncertainty. And so that's why we did this video today. We think they have a plan. You don't know what's going to come up. As we're hearing now for the weekend, 128 more banks. So we don't know what we don't know. And so we're pulling on a thread here. But either way, Bitcoin is like, people go to Bitcoin, they're like, I got to get off this island, right? And people go to gold because, hey, gold worked before. And I think either way, people are going to start diversifying their assets into that. So with that, Phil, I'm done. Do you have any final thoughts, or should we wrap it up?
Let's wrap it up. And also, as a reminder, we will be doing the FOMC announcement live next week, Wednesday. Set your notifications to all. And when we do go live, you'll get notified and you can see all the action in real time. And we'll basically just call out the price action and whether or not these markets are going to crash off that, or if they look like they're going to digest it and move higher. So don't miss it. You'll learn a lot as we walk through that price action and the announcement. And also describe to you what he's saying, because there's a lot of gibberish that goes on with those things. We'll tell you what that means, if it's hawkish, if it's dovish, long-term bullish, short-term bearish, whatever the case is. We'll sit there and dissect what they're saying, and I think it'll be very educational for you to watch that. So be on the watch for that.
It's going to be fun. Phil does an excellent job with this, and it's always very well received, and I enjoy listening to it as well. So Wednesday, hit the notification, hit the like, so that you know it's coming out, and we'll start our live cast of like 5 to 10 minutes before, so you can get a good seat, grab your popcorn, and see what these clowns have to say. Thanks. Have a great rest of your weekend.
All right, guys. Take care.
Trade Genius.